SmallCapSteve Live. I'm SmallCapSteve, joined today with Jay Lutz. We were supposed to be joined by Mike McClone, but Restream, our streaming provider, was having some issues. So we had to do that over Zoom, and we'll be bringing that interview on later with a full edit from our production team. Lots of stuff going on today in the Canadian small cap world. Bitcoin seems to have bounced back a bit, and we're just going to sort of go over the news quickly. So buckle up. Let's get started. Jason, sweet Jason, can you hear me?
Hey. Just
hey.
Unfortunate that Restream was not working for the interview with Mike, but you know what? It's all good because we got it. Our Rockstar video team's going to do some quick editing on it as soon as I upload this once we're off here, and we're off to the races, and you guys can see effectively what you saw regardless. So
yeah, well, it's good. It's all good in the hood, baby. I got some stuff that we could get into. Let's start.
I got a hard stop at the top of the hour, so I'm all yours for a half hour.
Let's start off with Verano. Verano here. They've just announced $100 million financing. What can you tell us here?
So the company actually issued two news releases this morning, and I kind of aggregated it together because you don't need me to put out two things one after the other on Verano. First that they put out was actually the acquisition of some Arizona assets. They note that it's for $7.25 million US cash plus 4 million subordinate voting shares. Notably, the company doesn't actually provide an equivalent value for everything. However, based on the financing, it's actually paid at about 123 million Canadian, which is quite a bit for 3 dispensaries in my mind. There is some cultivation assets, but for a company that's already got a significant stake in Arizona, I don't know overall if it's the best transaction. Regardless, the company also this morning announced that they'll be raising $100 million Canadian via special warrants. Special warrants is solely a result of them not having a short form prospectus on file with the OSC. So once approved, those 3.5 million special warrants will be converted directly to subordinate voting shares of the company with no other warrants attached. So a couple of news pieces from them this morning. My understanding was that the whole reason that they acquired AltMed was 1 for Florida and 2 for Arizona. So I don't know why they do another their first major transaction as being Arizona again. Unless it appears they're chasing down Harvest Health, but still.
Okay, well, let's. Verano's interesting. I'd like to have somebody from them on the show at some point to learn more. Someone just asked us about data metrics. Have they come back to life? What's going on here, Jay? Why is data metrics catching a bid?
So I was actually thinking about this one this morning. Data metrics right now, they've had 7.28 million shares traded this morning. They're currently sitting at 31.5 cents. This name, I believe, is on the move as a result of their investment in Graph blockchain. GBLC has had a rocking February. They're currently at 40 cents, up 2 cents on the day. I can't remember specifically how much they actually own, but I think it might be something like 25%, but I hate for someone to quote me on that. I know Dynametrics does have a sizable stake, though.
Yeah, well, look, it tells us that right now, and so Datametrics has a large stake in a cryptocurrency, and Datametrics, by the way, is actually it wasn't a beloved name, but they've actually put out some substantial news release on their core business. Forget about the coronavirus test kits, of which they've generated tremendous revenue working on. Forget about their investment in Graph blockchain. I think that they've got almost $10 million in revenue lined up on a recurring basis for their SaaS model of the social media analytics, which
I'll correct you a bit there. It's not just social media analytics. So their specialty is really artificial intelligence as a whole. One of their products effectively is social media analytics, which they do for the Department of Defense down south. Sorry, I believe it's the Air Force specifically, but they do work with the Department of Defense, and that's where the tech was built. They have a few use cases with that Nexology. It works well, to my understanding. Outside of that, they also have a great working relationship with the Lot Group out in South Korea, which comes from CEO Andrew Ryu. The Lot Group is effectively like a Disney of South Korea. And when I say that, I mean they literally have theme parks, and there's all kinds of businesses in that country that are owned by the Lot Group. I think 7-Eleven even operates as like a 50% joint venture with this company. So it's just huge. It's a massive conglomeration, and I think their connection is actually underappreciated by Canadian investors just because the Lot Group isn't really known here in Canada.
Yeah, well, it's one of those kind of things where, I'd like to see what the financial statements look like 2-3 quarters down the road, and we're now hitting the point where this is going to start to really appear. All this news flow that they put out, where you're going to see substantial top line revenue and substantial. You should see substantial margin and I would assume that we would get positive operating cash flow. So there's going to be some real things to look at and consider when looking at data metrics. And if Graph blockchain continues to catch a lift, I mean, this is a way you're getting kind of exposure to 3 different things in data metrics. I know we're long. We like the name, but the share structure is quite large. So you're always up against that. There's clearly tremendous shareholder appetite. Looking at the fact that anytime I go on the CEO boards, that's kind of one of the ways that I like to monitor sentiment. We've seen over 100 people on at a given time. Right now, there's only 30 on. I find that kind of strange that when this thing was trading at
it's right now. It's more so consolidating, though. I know you hate technical talk, but it did have a strong shoot upwards with the graph move, and now it's kind of consolidating in the 30-cent range, which is great to see because this thing has repeatedly hit like the 20-cent area and bounced off of it.
The strange thing to me is I hear more and more and more talk every day from people in my circle about this Wall Street reporter. And I don't know if you've ever actually watched any of his videos, Jay.
No, I'll be honest, I have not.
He gets on there and he says things like, he says things to the effect of, "We're gonna find the next 100 bagger, the next 100 bagger. Why find 10 baggers when you can find 100 baggers?" And
I'll take a 10 bagger all day, every day.
Because 100 baggers are easy to find. I did a podcast this morning with someone.
Yes. Let me emphasize that SmallCapSteve is now so big, he's getting podcasts.
I'm getting invited on podcasts now. I'm a pretty big deal over here. And the person that I was chatting with was talking about Netflix, and he's like, in small caps, you can find the next Netflix. And it's just sort of like, it's interesting to hear that because at the time I was like kind of caught off guard by that because it was so thought provoking that how I am, that if I find something interesting, it takes me a while to
Oh yeah. Sometimes I'm like,
traction.
did the call drop? Because you just stopped dead in your tracks and you sit there and think.
So really what I found thought provoking about it is how it's changed the way that we all look at small cap stocks, right? Because there was a time where Facebook, Amazon, Google, any fundamental based investor was looking at these things going, the fuck are you investing in that for? Just burns cash. None of these businesses make money. And now, Google makes a lot of fucking money. Facebook makes a lot of money. So you're hearing this from sophisticated investors. They're saying, you know what it's about? TAM, total addressable market. And that's kind of changed the tech investor. And I'm now finding myself really interested in small cap tech. And I'm now looking at it going, okay, well, what are those solutions? I thought we'd just be all U.S. cannabis, U.S. cannabis, U.S. cannabis, gold. Gold's easy. Gold junior mining gold companies are effectively just pieces of real estate thrown into a publicly
Gold
traded
is so
shell.
easy because it's such a simple understanding.
Yeah.
Tech is a different animal.
Yeah. But anyway, what I'm getting at here is, do we have these lofty expectations for these companies because we've seen what looked like piles of shit in Facebook, Amazon, Netflix, Twitter, that it was like, they got users, but can they generate a profit? Yeah, they can. In hindsight, those were all fantastic buys 10 years ago. And now...
Yeah. Now, to be clear here, 10 years ago, we didn't know if they were going to last 10 years. That's the risk with this stuff, right?
Well, but I think the fact that these have worked out so miraculously now have, and this is why, I was pumping my book on this podcast. I was talking Iguana. I was talking Power Band. And I said, the problem with a lot of these microcap tech names is you get these CEOs and they start talking about total addressable market because they know how sexy of a metric that is. But then when you actually peel back the onion, you look at it, they don't address any of this fucking market. What are they talking about? Sure, you got a big, massive TAM value you get to get all amped up and excited about, but you can't address it. So it doesn't matter. It's a moot point. Both Iguana and Power Band, look, this is risk capital. Both these things could end up as bankrupt zeros, right? But they are trying to address a very, very large market. Iguana, very simple concept. You put home batteries into houses. It's either going to work or it isn't. But if you think that that's going to be a big market, which I think it will, I think that home batteries is going to be a very big thing. That is, that they can address that market. If we're saying that the total addressable market of residential batteries in 10 years is going to be, $20 billion worldwide, $50 billion worldwide, they have a shot at taking up a significant portion of that total addressable market. Power Band, who's creating this fintech where they could sell cars online, they've already got a bit of a proven model there in Musa, who was the first national footprint of used car offices. I think they were in like 39 states or something.
Something like that,
yeah. And they're going to add 5 million cars in the U.S. to the platform. That is fucking scalable. Now, look, whether either of these things work out, I don't know. But I'll tell you this much. If you're looking for something that actually has a shot, it blows my mind, all these stupid fucking cloud medical plays where, it's like they have, one little tech component and the rest of it's just a bunch of stupid clinics.
Yeah, so, to be clear, a lot of that cloud stuff, they're just looking to grab the multiple.
Those can't address shit. They can't. I'm sure that they're running around talking about the total addressable market in their investor meetings, and perhaps the whole thesis of the institutional investors are that retail investors are going to be dumb enough to get duped by it. And
I think that falls for most small cap. We know the market we operate in. But
really, what I'm getting at here is can you address that addressable market? And that's when he started talking about Netflix, I started thinking yikes, Netflix could. It was scalable. It had a massive total addressable market, and they took a run at it. And you think about Power Band, you think about Iguana. These are two tech names that legitimately can address a massive market. I would say, both of them are tremendously risky. I don't know if either of them ever actually will do any material amounts of revenue. I'm talking $100 million of revenue. But they both have they have a shot at that. They have a shot of being a Netflix, a Blockbuster. Don't ask me to peg it, 10%. But when you think about it, if you're getting in down around $100 million market cap, even if it's 3%.
So I'll back things up there a bit. So you talk a lot about total addressable market, and that's always the driving force that these tech names have. But in the case of both EGT and PBX, is, let's be clear here, they've put in the time to actually develop it so that they can start to address that market. Neither of them are these startups that have nowhere to go because they haven't even signed their first transaction. In the case of Powerband, they've signed lease facilities. They've got hundreds of millions of dollars of available facilities for that. In the case of EGT, they're one of 4 suppliers that can hook up to the grid.
Can hook up batteries to the grid. There's solar.
Sorry.
There's like 5 solar panel companies where you can hook up your solar panels to the grid that have that, and then there's 4 or 5 that have batteries.
Regardless, they're one of literally a handful. Yeah. And that makes a difference in terms of your total addressable market, because there's a difference between total market and total addressable. And I think that's really what you're getting at. And you have to develop the company out to be able to make that total market into a total addressable.
We worked with a CEO of a certain company that made microchips for broadband, and he would talk about the total addressable market being like, the total addressable market's like 300 billion. And it's like, yeah, but that's not, you don't understand what fucking addressable means, man. like if this gets adopted, your total addressable market's what, like $1 billion, $2 billion? Still great. By the way, they never executed.
And even then, it's still a fraction of that. That's always inherent. Yeah. Even Netflix has a fraction of its total addressable market, especially now because that space is becoming so fragmented, it's ridiculous that people are actually starting to go back to cable.
So and by the way, guys, we're getting lots of comments today, which makes me happy. If you guys know of names that you think have a large micro cap or small cap names that have a large addressable market where they actually can address that market, let us know in the comments, because those are the 2 names that I believe can do that. And there's other names too. Like there's one company, I'm not going to say the symbol, but they do they deliver stuff, and they like to pretend that they have like this app, but then really when you peel back the onion, they're just a service provider for Amazon, meaning like they like happen to provide some labor and trucks for Amazon to go drop packages.
Related to that, Lyft this morning, you're going to love this one. Lyft this morning has announced that people will be able to call in to get a ride, aka a taxi service.
So
they now made it so that you, instead of using an app, you can phone them to get a lift. So they're actually working backwards in terms of tech, because I guess there's issues with app limiting older people or something. I don't know.
So it makes sense. Now that
it's a taxi service. Why does a taxi service need this massive multiple?
You know what's interesting? This is a whole nother topic. You want to get me fired up? And when Uber and Lyft first came out, it was totally fucking insane that cities allowed it to exist. And I know some cities banned it. Like here in Toronto, the city was selling these medallions. People were paying over $100,000 for a taxi medallion. And then all of a sudden, everybody's just allowed to circumvent the system because they have an app.
Yeah.
Like no. This is Canada. There's this thing called property rights. And the city of Toronto just sold.
In New York.
The city of Toronto just sold a bunch of property rights. It's their fucking job to defend it. And like, look, I'm thrilled about Uber and Lyft actually becoming a thing because it's made our world a lot better. But morally, should have never been allowed to happen. Because what you just described to me is a taxi service, and a taxi service should require a medallion. Now, perhaps Lyft in their service and the way that they get around the regulations in some cities is if you physically call, it has to be a taxi who picks you up. Maybe we're at the point where cities are just totally given up and they're not going to fight anything.
But just hold on. You're saying a phone call and an app is what differentiates things between being something you need a $100,000 license for and something you just need a vehicle for? Why is the technology that you use to contact the company the decider of how that company operates? But that's an inherent issue with the whole thing.
Well, like at the time, every taxi driver in the city was living.
Yes, absolutely. I understand that.
And I remember I once got in a cab one day, back when I was a math teacher in a different life, and I was kind of late one day, and I was living in the city. I didn't feel like walking all the way over to the subway station, and there was just like this, like I was trying to hail a cab, and this one guy pulled up, and it wasn't a conventional cab. It was like almost like a limousine kind of cab. And I guess he drove around rich people, but he had the medallion and he was really proud of that. He saved up for years. This was like 2009. Maybe it was, probably around 2009, 2010. He had the medallion and he paid like $135,000 for it or something like that. And it's like, and he was, or it might have been more than that. It might have been like $250,000. And, he was really proud of it, and he spent his life like working towards building this asset that would get him it was effectively his retirement plan, and that just got, and like, look, I know a lot of people like they get angry. They're like, oh, most of the medallions are just owned by like rich Jewish dentists and shit, but like there's
still some
fucking property rights, man. Like you can't, like, you got to defend this stuff. So. Look, it's making our world it's probably better for all of us, but it's not fair. And you like, anyways, we don't need to get into that whole thing.
The sole purpose of me bringing it up was the whole tech thing, right? We talk about how these telemedicine companies, they go in and acquire a bunch of clinics, call themselves telemedicine though, so that they can get this 10x multiple. Well, I bring it up because Lyft is effectively doing the same thing with what is literal taxi service now, right? So that's the challenge with tech. Things aren't always as innovative as they seem. But
yeah, I don't know. I'm just of the. I don't even know why we went on this rant. What else should we talk about today? What other symbols did I throw up that we were going to talk about? Hive's doing well today.
Hive. So let's chat Hive. Today they announced that they will be acquiring 3,000 more next generation miners. This company has stopped providing what kind of actual. That's a terrible.
It's having a great day. It's having a great day.
That's so bad. Anyways, the company has stopped providing what kind of actual miners they're purchasing, and they don't even say like the value of their purchases anymore. But yeah, 3,000 new miners today. They're adding 90 pH to their capacity, taking them to 1.763 EH, which puts them significantly ahead of Bitfarms. I don't know what HIVE.v capacity is currently, but the way these things change, I should probably know. This is notable to me solely because yesterday they announced they'd be purchasing 6,000. So in 2 days, they're buying 9,000 more miners. The miners today will be acquired over March and April, whereas yesterday it was July and August. So their capacity isn't there yet, but they are certainly working towards constantly growing that capacity. I'm just going off memory here, so if I got something wrong, I apologize, but I'm fairly certain I'm right.
So during the last, and we just talked to Mike McGlone about this, during the last, blockchain Bitcoin bubble, it was all about anything that was blockchain, right? And you got into it with a guy yesterday on Twitter over like this concept of blockchain.
Do you want me to go down that path?
Go for it. It's time for a J rant. Let's go.
So my main issue with this whole blockchain thing is this idea or this theory that amongst blockchainers, I'll call them, that blockchain is going to change the world. I extremely disagree with this. Do I think that digital currencies will change things? Yes. Blockchain? No. So in particular yesterday, I got into it with a guy who is demanding effectively that logistics as we know it will be changed globally because of blockchain. It's going to help trackability and all this crap. But you know what it is? It's crap. Why? Because at the end of the day, it's still susceptible to user error. Now you're going to go, no, it's blockchain, so it's inherently on the chain. Yes, absolutely. However, here's the issue. So manufacturer A builds a product. They attach some blockchain garbage code to that product so that it can be tracked when it goes to the shipper, when it goes along the shipper's route, and when it arrives at the end of the destination, at which point in time it can then be sold by the retailer and it's tracked again, and then I assume it leaves the system. But the inherent issue is blockchain is changing nothing from the current SKU system. Right now, the manufacturer still knows he made 10,000 widgets. He shipped them. He sent them to FedEx. FedEx still has to track those same damn packages the whole way. If some Joe Schmo in Atlanta forgets to scan a package, it's not updating the blockchain to tell you that this package is anywhere else. It's not like it has a geocode attached to it. And then it's still susceptible to be stolen at the retailer, which they already know through the SKU system. It's not changing anything. Blockchain doesn't stop some random guy from walking in and taking that product off the shelf, putting it under his jacket, and walking out. It's still screwing up your whole logistics system. And blockchain is providing literally no additional value to the whole thing, aside from maybe some company being able to pump it on the CSE or the TSX venture saying they use blockchain. There's no benefit in 90% of applications. Finance, absolutely. It's easy to see a use case there. But anytime you challenge these people on use cases or how it actually changes things, all they do is they give words. I gave one guy shit yesterday for saying, thank you for giving words that say nothing. That's all it is.
Oh, well, this is quite the rant. Somehow we have over 400 people watching us right now. I don't know what's wrong with all you people listening to
listen to me rant about
listen to Jay rant about. No, look, it was stake oil, and that's what all these microcap deal guys do. And I'm actually I'm starting to get pissed off about it because I'm starting to realize that most of these shit that goes on in microcap is just. They're just vehicles to transfer wealth from retail investors over to deal guys, right? And that's all that fucking happened to blockchain, right? Like most of these deals were total bullshit.
Where did the money go? That's all I ask.
$300 million market cap in global.
Where it went, but where'd it go?
Global blockchain had a $300 million market cap. 300 million.
Who?
Remember global blockchain?
No.
Not graph blockchain. That's where I messaged Andrew Ryu the other day about graph blockchain, and I accidentally called it global blockchain. And now it's come back to me. The global blockchain was a popular blockchain company from 2017 that had a $300 million market cap. True story. My man Benny Bruiser, if you're still listening, I saw him make a comment there, once invited me out to lunch with the CEO of Global Blockchain, and I kid you not, he didn't show up because he took a nap and forgot to wake up. It was like a 2 p.m. meeting. This company had a $300 million market cap, ultimately went to zero. I don't think that, and it was an IP play, I don't think that any of the IP got sold for anything.
So... No, what happened? It's the classic Canadian story. Global blockchain in 1 second here. I'm doing this on the fly. February 7th, 2019. So the whole blockchain garbage pump was 2018, effectively, that fall. They changed their name to Global Gaming Technologies because it looks like they're going to go after the esports space. And now they are delisted from the CSE and only trade on the OTC markets. So whatever the market cap was, 300 million, gone.
Yeah, yeah. We're getting a lot of comments today. James Pyatt says, "Tell us how you really feel, Jay." Cole Nutter, I haven't even read this comment yet. Ha ha ha, you aren't wrong, though. The government's going to digitize their currencies and make the same claims that legacy currencies are blockchain and just as safe, if not safer.
Actually, we talked about that a bit with Michael McGlone about just the entire digital currency thing and how it's going to change things. So I don't want to provide much commentary on that because we got to get that updated and out to you guys. I'm targeting the next 24 hours, and our video team doesn't know it yet, but they're going to be working on it. One
last thing I want to say today is today my son Carson turns 4 years old.
No kidding. It's my sister's birthday too.
Well, look at that. They share the same birthday.
And I'll do a shout out to my sister because she runs our Instagram account and she does a great job with zero pay. So I really owe her one.
No, we appreciate that. My son, who turns 4 today, remember all the COVID stuff really started up in like mid-March. My son has spent his entire year as a 3-year-old not really getting to see other kids. Like he's hung out with other kids. Like we took him out to, and I don't know if Michael Dane, if you're listening, who's the geologist, former Goldcorp guy, he's CEO of a couple microcaps. I once took Carson out to his farm when he got to hang out with Michael's son. It was like one of the only times that Carson's got to hang out around another kid in the last year. And it's just, it's such a strange time. And I hope it's not too impactful on all the kids that are, and it's not just, 4-year-olds. It's like, this is a formidable time for these kids where they should be interacting and seeing other kids. And like today he's going to have his birthday party over Zoom, seeing like his best friends and cousins. It's such a bizarre time.
Yeah, no, it's not easy. I mean, here in the middle of nowhere, Saskatchewan, I'm grateful that my son's been able to continue playing hockey. It's practices only, but he's 5 years old, so it's fine. My daughter is able to still go to gymnastics once a week, so they still get some outside interaction on top of preschool and school. I mean, it's largely the same kids, but it's better than nothing, just because it's like you say, it's such a formative time that they need it, right? And I mean, we need it too, because everyone needs a break.
Yeah. Well, let's wrap it up here, because speaking of your son,
I gotta go pick my son up from school, because although he's at school, he cannot stay for lunch because of the virus, because that 45 minutes where he's not at the school is apparently the only time the virus will travel.
In rural Saskatchewan.
In rural Saskatchewan, in a town of 300.
Do you want to quickly say what else we got going on the dive today?
So this afternoon we have Serafino Ionco. I apologize, I probably said that wrong.
He's a hitter. He's a header.
He's yeah, he's great. We've had a few calls with him on top of the videos, and he's great.
I just gotta say, when we went to interview Serafino, you didn't know who he was at the time, and I'm like, hey, can you write the questions for Serafino's interview? And you looked at his LinkedIn, and you're like, this guy's a fucking hitter.
So I'll be clear. I had heard the name Serafino from my writing with Grand Columbia and Caldas. I didn't realize how much of a hitter he was. And CEO of GasX, director of Caldas Gold is now Eris Gold. I think that's how you say it. Where he's a director, he was formerly CEO of the company. Now that board is just impressive in itself, and we can do a different bit on that because that's just something else entirely. But he's also a director of Grand Columbia, and he's got.
Isn't he chairman?
Grand Columbia, I believe so, yes. But you're not going to see many people more qualified than him among the small cap space. NG Energy, it's a great interview, and I regret not getting into this company earlier, but I go on, but I got to get going. So he's on at 1:30 Eastern. On top of that, we have I've got a company profile for Willow Biosciences going out this afternoon right before the bell. On top of that, I have some stuff. I believe it's on oil going out about 2:45 from Hermina. And I got to do some more editing because I'm getting backlogged, and I want to hold some stuff for the weekend. But our writers are just pounding stuff out like crazy lately, so I got to get caught up.
And shout out to my man Braden Mack. I don't know if I've never asked him how you pronounce his last name, if it's Mack or Mackey, which is weird because I've been friends and 2 years and writing with us for a long time. But he put out a little piece here right that got published right before we started on iguana. Check it out. It's a great piece. Lastly, tomorrow we got Jay Martin from Cambridge House joining us. On Friday, we've got we're supposed to have a large U.S. cannabis debt fund manager on, who's a former star athlete and friends with a bunch of pro athletes. So I'm sure Jay will love that call. as I'll probably be prying more about pro sports. But I sincerely appreciate everybody who joined us. One last thing, nothing we say on this show is intended to be financial advice. It's not a buy nor a sell recommendation. If you're looking for financial advice, please go seek a licensed financial advisor. This is for informational and entertainment purposes only. I will see you all tomorrow at noon. Thank you for joining us.